Yeah, hello everybody. Welcome back after the short lunch break. It's always difficult after that moment, but we're going to try and be interesting. Just briefly, and least importantly, I'm Christian Schubert. I'm a journalist. I work for Frankfurter Allgemeine Zeitung, covering Italy and Greece. And I would like briefly to welcome our guests very quickly because we don't have much time. Here, right next to me, Maria Nefeli Bernitsa from the law firm, also called Bernitsa. Then we have Cristina Torella from Fitch Rating Agency. Then we have George Trifonopoulos from the Hellenic Financial Stability Fund. We have Paolo Fioretti from the European Stability Mechanism in Luxembourg. And we have, last but not least, Konstantinos Sarafopoulos from Alpha Bank. And with you, Mr. Sarafopoulos, I would like to start because you're the only representative of Greek banks. We've seen Greek banks having good growth recently, was applauded and welcomed by everybody. And we all hope, of course, it will continue. Can you just briefly tell us how did that work? How did you get to this growth? And will it continue? Is it sustainable in your view?
Right. Thank you, Christian. Let me welcome everyone as well in this room and from other locations. So in order to link the present and the future, you have to go for briefly, momentarily, to the past and understand that Greece, relative to other countries, had a really difficult decade across the whole socioeconomic spectrum. When everyone, let's say, had the fruits of quantitative easing and very low rates, Greece was, let's say, the odd one out from that environment. And as we started exiting this environment idiosyncratically, then the macro landscape changed dramatically from 2022 onwards. It is important to highlight this because it's not an exaggeration to say, especially in Europe, there is a whole generation of professionals that don't really know what it means for rates to rise sharply, nor they know what monetary tightening actually is. And this is important because for us and for the Greek banks, it's our responsibility in this environment in terms of our commercial policies, in terms of our lending, in terms of our growth, to make sure that we reflect from the one side the positive fundamental and supportive trajectory that Greece is currently exhibiting, but on the other hand, let's not forget the macro environment around us and having a prudent and transparent approach towards commercial policies. In that environment, indeed, Greek banks had a great, let's say, 2023 Alpha Bank as well. It was a milestone. Capital restoration organically was extraordinary. Speaking about Alpha Bank, we had like almost 250 basis points of common equity tier 1 increase. Yes, the macro environment helped in terms of the higher interest rates and the structure of the balance sheet that the Greek banks had, with a very deleveraging balancing from one side, having spent all these years cleaning up the non-performing loans. Yeah. But and
if I may say so, with the help of a lot of public money, which guaranteed the Hercules scheme, so you could get rid of the non-performing exposure.
Correct.
Right?
Correct. Yeah. But at the same time, in Alpha Bank, we've also seen efforts to reduce costs. We have 15 percentage points reduction in costs, and also increase asset management balances and generation of fees, which is something that is going to carry with us for the next few years. Yeah. Especially in this environment, though, what was important is to remain balance sheet resilience, because that's key in future sustainable growth and profitability, no matter what the macro environment is. So, yes, it was a great 2023 for everyone, but it is important to go into the next 3 years of our business plan with good and strong liquidity capital ratios to support the Greek economy, our clients, and hence our profitability. Now I'm going to put a few more dimensions into what is important to us with regards to sustained profitability over the next few years. And that is, for us, being extrovert. It's at the core of our purpose and values in Alpha Bank. The deal with UniCredit was one example on that front. With that deal, our clients in the retail space have the opportunity to have the product factory of UniCredit in mutual funds. Our clients in corporate sector can have the banking channel network of UniCredit abroad. And also the clients of UniCredit can have the Alpha Bank's know-how in order to invest in their project in Greece. And I will conclude saying that another dimension of that, which is at the top in the agenda of our CEO from 2019, is bringing talent back from abroad and blended with existing vast depth of skill set that we have in Alpha Bank. Yeah, it's an effort from 2019. We have this community called Ithacans, which I'm part of. I'm a living example of that. And we feel that our vision for a modern, agile, human-centric European bank comes with the blending of the talent that left our country and mixing it with the depth of knowledge and skill set we have in our organization.
Okay, thank you. Mr. Trifonopoulos, you are sort of the institution that privatizes the bank, right? Or re-privatizes, if I may say so. Recently, Piraeus Bank, 27% was put back on the market. I think it went very well. Big demand. Yeah? And I guess this will continue because there are still some stakes. I understand, like from NBG, maybe also Attica, which is in the process of merging with Pancreta. I don't know how much you can tell us about that, because all is in flux, I understand. But where do you see, or what do you think, how can the Greek banking system become more sustainable? Because there's still quite a lot of weaknesses, aren't there?
Yeah. Hello from my side as well. I would like to thank the organizers for this nice invite. I'll be very specific. With regards to Attica and Pancreta merge, there is a process. We are on the go of trying to bring this forward. Actually, the whole merge is something which has been decided and has been announced in terms of creating the fifth pillar, if you say, of the banking sector, which is not only the potential merge between Pancreta and Attica, it's also Optima, in order to foster competition and to have a challenger, if I can say, or an alternative. We're going to discuss about that later on, I think, against the more significant other institutions, right? So that's one thing. We're still in the process of it. With regards to what we're going to do with the remaining percentage of MBG, our lifetime is until end of 2025. So right now we're just running some scenarios, but nothing has been decided, so I don't have anything to mention to you. Yes, indeed, we have a lot of demand from previous sales of our portfolio. Piraeus is one example, NBG was another. Alpha Bank was a different story. So what we see is that in terms of sustainability and growth, we see that the Greek banks have recovered definitely, and they take advantage of the momentum right now of the sovereign, right? So we see a lot of upside also in terms of growth. This morning was mentioned that only for green energy transition, and what was mentioned by the banks, basically, we will need about 20 billion rough estimates in terms of capex for green transition in the next 5 to 10 years. So there is a story there. Obviously, there are other things like very performing loans that we have a market there which will require refinancing. So there is another pillar of growth. At the same time, we need to be cautious about keeping the costs down, as Greek banks went under massive restructuring in terms of operations and personnel and non-personnel costs the last years. And at the same time, always keeping an eye on managing risks prudently. And in terms of restoring the equity base, which has to do with the gains and the result, better performance, which means that we can offset a little bit the DTC, which is a big kind of a problem, in the Greek story. That's another one, I think. So if we also keep a dividend, a solid dividend, kind of policy, depending on the approvals from the regulator, I think the story is there, and obviously the Greek banks will do better.
Yeah. And just briefly, your processes remain open to foreign investors. So, like UniCredit bought a stake of 9% in Alpha Bank, right? Yes. From you, I think. And so this process remains open for foreign banks?
In terms of?
If a foreign bank comes and wants a stake,
yes,
that you still have.
We have published our strategy. Everything is public, so there is an unsolicited offer. Obviously, it can come along, but it's only basically NBG right now which remains.
Okay, okay. Yeah. Mr. Fioretti, you represent the European Stability Mechanism, and maybe you can explain, first of all, the role that it has here in Greece, also for the banking sector, and then lead to the question, what, looking forward, according to you, are still the weaknesses that the banking sector needs to tackle?
Okay, thank you, and good afternoon to everybody. I have to say that I'm in the worst position today, because it's impossible to hear what my colleagues are saying from here, at least also you, Christina. And but the role of ESM is very clear in Greece and well known. We financed the program, the last 3 programs, and now we are a partner in Greece, because we are interested that Greece succeed, the economy, the society, and continue to this recovery path. And we also invested a lot. We provided our money was used for macro and fiscal adjustments, but also for banking sector recapitalizations. We injected 46 billion of our money was used for banks. That was how we financed HFSF for the intervention. And we are very happy of the final result, because we are discussing now of disposal of the stakes from the public sector. And I'm really happy, for example, I'm Italian, I shouldn't say, but at least there is a large foreign banks, Italian banks, UniCredit, that can operate as an anchor investor in Alpha. And so far, all the disposals are going well. We are satisfied about the status, how it is performing the banking sector. The banks are much better, but much stronger, more resilient than in the past in all the metrics. There are still weaknesses that this outstanding performance, recent outstanding performance can help to fix, because at the moment the Greek banks are among the best performing in Europe. But we have to keep in mind that this profitability is just cyclical and related to the interest rate cycle. Not all, but a big chunk of this. But provide additional money, capital to the banks to fix their problems, because still I think there are problems. One are, for example, if you look at asset quality, but then Christina will expand, she knows much better than me. NPLs are still higher than euro area, 7% in Greece, 2% in euro area. Capital is very high, but the quality of capital is low, because there is a lot of DTC. Around 60% of capital is in form of DTC. The business model of the banks is still outdated, old-fashioned, based on branches, old products, lack of customer segmentation. The risk management has improved hugely, but still is, I think, should improve further to allow exactly this to create a better segmentation of a customer portfolio. In this way, the banks could tailor-make better the products for their customers depending on the risk, and do some policy, price policy, applying different prices to different customers with different risks. And this is, my final remark is related for me that what is the real weakness of the banking sector in Greece is the lack of competition.
Is it, sorry? Is it?
The lack of competition.
Yeah.
So you as well.
Yeah, I wanted to talk about that. Can I just stop you there and ask you, Ms. Bernitsa, I think you have, in your professional function as a lawyer, but also as a client in a way, you know the sector. What is your judgment on the competition? Is there enough competition between banks? Because one condition for that is that clients are switching, right? Companies, retail clients, that they can switch from one bank to another easily without much bureaucracy, with low costs. I don't know whether you have any insights on that, but what is your feeling on that? Also in the light of the fact that we have some digital banks, I understand, coming to Greece, yeah? Revolut, maybe N26. So is the market lively from your point of view?
Thank you, Christian. There was quite a lot there.
Yeah.
So let me.
No,
that's absolutely fine.
We also have more time maybe to develop later.
So starting off, it should fill us with optimism at the backdrop of what other people on the panel described has been the last decade. It should fill us with optimism that we are talking about increasing competition. And the reason for that is because it signifies two positive themes. The first one is that there is demand, that the economy is flourishing, that we want Greek banks to do more. And the second one is that we have actually learned from the mistakes of our past, where we saw that if banks kept growing too much and there weren't enough barriers to entry, then banks just became too big to fail. And during the Greek recession, or actually right before the Greek recession, there was so much competition. Regulators had to struggle to keep all of the credit institutions afloat. During the Greek recession, 20 credit institutions actually underwent liquidation, and a number of others had to be transformed. Let me remind you of Agricultural Bank, or Eboriki Bank, or Yeniki Bank. So this is the context for us having just 4 systemic banks today. So is it time for more competition? Absolutely yes. We are now in a position, we now have the luxury to be pushing for more competition. Where is this competition happening? We're seeing, and a couple of people already mentioned this, but we are working on the merger of 2 of the non-systemic banks, Attica Bank and Pancreta Bank. There's also a lot of positive traction with Optima Bank having a very successful IPO a few months ago. And what I think we've forgotten to mention is that there are quite a few cooperative banks as well. We helped one of them recently in their foreign investment, which is a huge move forward from where we were a few years ago. So boosting competition has become a priority, but we need...
And the banks are reacting.
And the banks are reacting. And so the banks are reacting, kind of moving on to the second part you mentioned about the ability to switch. It's actually not that costly or that complicated to switch banks in Greece. I'm sure many people in the audience will have multiple bank accounts with more than one of the systemic banks, and the big corporates have open lines of communication with 2 or 3 banks when there's a a huge transaction, and you will know this better than me, but you cooperate. The systemic banks come together to cooperate for funding. But the reason, it's not a reason of complication. The reason is that there are new kind of segments of the market that are asking for more. So millennials, Gen Zs, people coming from abroad, from your Ithaca scheme, they want a completely different experience. They want fully online. They want to integrate it with their investments. They don't want to have to go physically to a shop, to a banking shop in a very limited time window. And in that context, entities such as Revolut, who a few years ago tried to enter the market and the market wasn't mature enough, they are actually now announcing that they're coming in confidently and strongly. At the same time, the Greek banks are reacting to that. We have Snappy, which is Piraeus Bank's neobank, and this is being launched momentarily. You have Viva, you have Plum Investments, and you have a lot of focus on this fintech space.
Interesting, interesting. At the same time, Mr. Fioretti was talking about outdated business models, but I want to come back to that maybe later. Mr. Rella, you have the international view, right? You can compare Greek banks with banks in other countries. What, according to you, are the particularities of the Greek banks?
Well, first of all, thank you, and it's my first time attending this forum, so I'm very happy because I see the scale of the event and the breadth of topics. So, just maybe to add a different angle to the conversation, I would like to give the view from a rating agency and as a credit analyst. And just to give some background, coincidentally, I've been in the front row seat to the evolution of the Greek banking sector since the sovereign crisis, because I've been following from a rating perspective. So that's just to see that I have a bit of the history. So I think that when it comes to the idiosyncrasies of the Greek banking sector, I think we cannot ignore the fact that it's very correlated with the sovereign. And I mean, since 2021, we've seen a positive rating trajectory both in the sovereign and in Greek banks. And just let me briefly touch on Greece sovereign rating, because actually there was some reference this morning. And basically, the return of Greece into investment grade, I think it's a very positive step for banks which are still rated below investment grade, at least by Fitch Ratings, between BB and BB+. I think what is important to note is that we also have them on a positive outlook. What this means is that we see upside rating potential. I think we discussed the good progress of the Greek banks and the Greek banking sector overall. I think we alluded to the important asset quality cleanup, to the improvement in profitability, because obviously this has, I mean, the reduction in the cost of risk plus the heavy restructuring that the Greek banking sector has undergone, I mean, has clearly supported the sustainability, at least in terms of the profitability. And on top of this, from a capital and funding point of view, also banks have strengthened their capital positions because of improved internal capital generation. And funding-wise, I think this is quite visible because since Greece returned into investment grade, and bearing in mind Greek banks have to meet or have to build resolution buffers, we've also seen increased access to the markets at a time that the cost of funding has come down, also favored by this increased appetite from investors towards Greek exposure. And I think most of it relates to the sovereign, but also the evolution of the Greek banking sector.
Can you maybe say, sorry for interrupting, which bank will first get back the investment grade status? Is there
it's a good question, and I often, lately, I get this question. I think I would remark two important things. One is first, there is an element which perhaps goes beyond the controls of Greek banks, which is the operating environment. I think over the morning we discussed quite a lot. We agree that the investment grade has attracted investments, both domestic and foreign investors. And probably the fact that the European funds has come in, although with some delays, but this is also common to other Southern European countries, has boosted, or at least seems to suggest that there's more investment in the country, and probably in the corporate segment is more visible. Now, the question is more on the retail segment, where we still see a lack of demand. And probably this relates to the fact that the servicing costs in Greece are still quite high. The savings relative to Europe by European standards is quite low. So I think we need to see from a banking business perspective that what we initially see in the corporate segment is translated into the retail segment, and this should provide more sustainable business opportunities for Greek banks.
Is it maybe... Yeah, sorry.
So this is on the one side, but with that said, I think what is under the control of Greek banks and which could potentially support that upside on the ratings is the continued asset quality cleanup, because still lags behind European peers. I think also, and I think Paolo alluded, that there is some cyclical element with the interest rates, so we need to see further development in the fee income generation, because again, this is an area where they lag behind relative to some of the peers.
Good, yeah, thank you very much. I would like to bring you back in here, Mr. Saropoulos. In a way, it was very easy to make profits recently. I say this a little bit provocatively, but you asked a lot of money, a lot of high rates from the borrowers, and you gave very little to the savers for the deposits, so you make good profits. But this will not last. So what will come in maybe, we don't know, but 2 years or so, when the interest rates are much lower? Are you on a stable basis to live in that world as well?
All right, thank you. It's a topic that is widely discussed, both what has been happening in 2023 and going forward. Let me start saying that the profitability of the higher interest rate cycle and the low deposit repricing is something that we saw across Europe. Yes, Greece and Southern European countries had probably the lower deposit beta or pass-through, as we say it. But overall, if you look at the blended deposit cost for Greece versus the Eurozone, it's just 50 basis points difference. Now, why Greece and other European southern countries had much lower pass-through predominantly is a byproduct of the composition of the deposit base, which is the retail client base, which has much lower inertia to the sensitivity on interest rates, whether they go up or down. On top of that, as we've all spoken here about the deleveraging that Greece has been going through over the last decade, having a very low loan-to-deposit ratio, like 40 percentage points below the European average, and also having an average deposit balance amount close to 4,000, 5,000 euros per account, are also important factors for that profitability. And yes, I would say that Greek banks offer to their customers, similar to the European counterparts, high deposit products and also alternative investments.
Now they do.
No,
right?
we've started from February 2023, but as I said, an account with 4,000, 5,000 euros as a balance is predominantly used for liquidity cash flow management rather than savings or investments. Saying that, it is important to highlight that the Greek banks work with the Greek government to find the right mix of measures that would alleviate interest rate rises to the consumer and to the households. We were one of the first countries to bring a cap on the Euribor for mortgage holders. Predominantly, the mortgage market is floating rate in Greece for 1 year. Other countries followed, like Portugal in September 2023, and we extended that measure for 1 more year. So there has been good cooperation to find the right cohort of the society and the right measure for it. Now, moving forward, 4% is a number, 2.5% is also a number, and we need to understand that it reflects the macro environment. 4%, someone may say it's too high. It may bring, let's say, cost of risk higher. It may also lower down lending demand or credit demand. Yeah. So 2.5% as an interest rate environment is just about perfect for an economy like Greece, which is projected to grow close to 2.5% over the next few years. So even though initially you may see some drop in profitability, I think the environment, I'm quite optimistic for the Greek banking sector. And on top of that, it comes to the point where the volatility from rates settles down, fee generation, products like mutual funds, strategic partnerships like the ones we've mentioned with UniCredits play an important role to sustainable profitability going forward, as well as the dynamic management of the balance sheet, which have been done, at least in Alpha Bank and from other peers in Greece, over the cycle of the higher interest rates.
Yeah. But still more on the macroeconomic level, I understand that lending is going down, actually, whereas the economy is growing. Mr. Fioretti, how does that? How can we understand that?
No, that is related also to my point before, the lack of competition and the old business model of the banks. Because this happens in particular because probably there are, it's related to three issues. One is the legacy issues from the crisis that made the banks over-conservative because they have still scarves and they are very reluctant to lend. It's due to the economy. The economy is very small. It's 10 million people, 220 billion of euro. But you have to keep in mind that almost 40% of the economy is still impaired. Because it's true that the NPS went down from 45, 50 to 7, but they were sold, are out of the banks, but are still there in the economy. And they have not been worked out. This means that the pot of customers the bank can fish is very limited. And this is one of the difficulties. Then, at the moment, probably there is all the demand and the offer is subsidized through RRP, EIB, EBRD schemes, European schemes. These make difficult to find new customers, good customers where to lend. But on the other side, there is also the responsibility of the banks, because the banks are not. They have evolved a lot, now are stable, stronger, more resilient, but now they have to modernize much more in terms of risk management, business model, because only with a modern bank can select and target a good client and offer money. An example is the real estate market, in particular the residential one. We see an increase in prices driven by a golden visa, mainly, not only mainly, in part, and then there is 80% of the deals in the residential real estate is done by cash, by Greek customers. Why the banks are not able to meet this demand? There is some demand, but probably it's also a matter of products and or the right products to assign, to offer to the right customer. And this you can do it only with a very strong proactive, modern risk management, a modern business model. We don't need to go in a store 2 hours away to pick up a credit card or whatever. Yeah. This will also help to ignite the competition. I agree, there is some initial signs of competitions, but you have to remember that the Greek banking sector is the most concentrated in Europe, apart Cyprus is the most concentrated, because the banks account for more than 90% of total assets. And you can see that they offer the same, more or less, the same products to the same to all the same customers, and there is not a very strong price competition.
Yeah. Okay.
And this bring also the point to the lending, because make it difficult for them to target and find new safe lending.
Yeah, yeah. Mm-hmm. Now, I think the key question was there, how can banks modernize? And we have less than 10 minutes left, so I would like to ask the four of you, just in 2 minutes each, what do you think? What are the most important points where Greek banks should modernize in the near future? Maybe Mr. Trifonopoulos first.
First of all, I agree, but at the same time, there are certain things that they are kind of contradicting. We end up with 4 banks after this kind of, let's say, exercise and at the same time dealing with crisis. What should be the right number of banks in the Greek banking sector that also, I think, you were involved. So, in Europe in total, we need to, in the banking sector, to come back, at the higher levels of productivity when it comes down to banking, to compete with the United States and Asia, Pacific, and to regain competitive advantage. I think, so in that sense, you need bigger banks, right? Simplistically speaking. But at the same time, you have to deal with competition. So I think the Greek banks and banks overall should focus in their business models, like, diversify to the extent possible, because we have seen a lot of movements, not necessarily from the Greek banks, but other banks internationally. Yeah, it's a little bit fuzzy, fintechs, but it's not a clear path that you can gain and, results to your bottom line directly. Cross-sale, obviously, I would agree with retail. Retail is kind of a problematic kind of thing in Greece due to the fact that we have high repayments due to the vintages of the past. But we don't have a demand. We don't have right now the demand, right? And I don't think it's like only the offering of the Greek banks or like it's the number of the banks, but the demand is not there. Obviously, when it comes down to mortgages, which is the main thing for retail, excluding SBLs, I think the real estate prices don't help either. But at the same time, like, Greek population has shrunk, and a lot of people, they cannot afford it. So yes, regulation doesn't also play a role, which is strict and the criteria to get a loan. For
last point.
Yes.
Last point.
And I think for SBLs, because there is room for improvement to provide financing to small businesses. By looking also what alternatives a small business has if the banks cannot provide financing, because they are really depending on the Greek banks and the banking sector.
Thank you very much. Ms. Torella, 1 minute to this one question. In the past, Greek banks were also expanding abroad, right? They were on the Balkans and so on. Is it realistic that not too far from today, Greek banks will again expand abroad? Because some of them have some excess capital, I understand.
Well, we have the Eurobank acquiring a Cypriot bank, so sort of expanding in another market. I think we need to see how the Greek banks allocate excess capital, but I think there is more to do in the domestic market, and I alluded to the revenue diversifications. I see opportunities of joining with specialized partners to develop the asset management, the insurance, probably the agreement between, Unicredit and Alpha is in that direction. So I think there is a scope for growth in those segments. And this is quite important because it brings to the point of sustainability. Not only sustainability of the Greek economy, which probably has been deeply discussed, but also in terms of the business model of the Greek banks. And I think, yes, they could look outside, but I think they still have room in the home market.
Mr. Ferretti, two sentences.
Just an observation. For me, before expanding abroad, they have to fix their problem domestically at home, because otherwise it's a dangerous strategy. They have to modernize and then go abroad.
Okay.
Otherwise, it's a risk.
Ms. Nefeli Bernitsa, coming back to this question, where do you think the Greek banks should modernize? What is the most urgent area where they should modernize, according to you?
I would say two items. The first one is differentiation of the product. The market is starting to want something a bit different. If there's no differentiation in terms of cost, the market wants to not have to rely on phoning up the family banker and asking them what options you have, only for them to think about it, come back. People don't want that anymore. That's the first one. The second one is improving the quality of capital. So right now, I mean, there are all these headlines about Greek banks making, having big profits, and there's often room for skepticism when you see, I sympathize with those headlines, but there's also a bit of room for skepticism, because right now, deferred tax credits, deferred tax capital is a big part of what is accounted for as profit. Okay. And it is uncertain whether, how, and if Greek banks will be able to call that in if the situation gets a bit more difficult.
Okay. Mr. Sarafopoulos, are you up to those challenges?
Yeah, as I said before, obviously on the DTCs I might have a slightly different view, as it's something that we've seen in other European countries as well. But as I said in the beginning, I think going forward, being extrovert, being transparent, strategic partnerships, broadening the product offering to your clients is key. And that's why we really partner up with someone that we believe had exactly the same vision with us. And it's something that it's going to carry us over the next few years. But also, when we talk about modernization and digitalization and automation, we also need to take into account the characteristics of our country. What works in Germany, France, or the Scandis is not exactly working like for like in Greece. The culture, the human contact is very important for our clients. So a hybrid model between better digitalization, better automation, but still keeping the human touch into it, I think will be key for the profitability of the Greek banks going forward.
Okay. Just curious, because if I'm a customer of Alpha Bank, can I make transactions on my mobile phone?
Yeah, of course.
There's an application, I can...
Of course.
I can transfer money back and forth.
Of course you can.
Okay.
But there's a big demographic in Greece that is not comfortable of doing that due to age, due to literacy. So we need to take this into account so we don't exclude people from the banking services and everything that we need to offer back to the society.
So you still have quite a network of subsidiaries?
There needs to be a human presence, and there needs to be the right balance between digitalization and human touch into our model going forward.
But it's also a big cost, right? Keeping that network?
It's coming down, and again, there is a way that at least we tackle it in Alpha Bank, where we can have, let's say, a specific time zone where people can come to specific branches, much fewer than before, in order to tackle the things they want to tackle face-to-face.
Okay. Last word, please.
My point of view is when we talk about modernization and business model specifically of the banks, I think it's mostly, the approach. And because banks need to balance between, for instance, RWAs and where I'm putting my money and how much I make, right? Because they're highly regulated. So in that sense, the approach, though, should be modernized. And what I mean is it should become way more entrepreneurial, either by responding to the market needs in the COVID area, post-COVID, how they assess the risks, and what places and resources I have, like, in my fingertips in order, and obviously skill sets, to understand what kind of risk I subscribe and how should I price them. And that makes a fundamental difference how you develop your business model.
Okay. Yeah, I have to stop you there, so thank you very much.